Good morning. It is a red Monday. We had some huge news hit the market, which is that there was a new player in the AI space, DeepSeek, and DeepSeek is a AI app, and they've built large language models. They've, in essence, created a company that rivals ChatGPT and others like Meta's Llama, and they're at this point are saying that their methods, their ways of getting something similar, competitive to ChatGPT, are less expensive, and it really brings up a important moment. For the last 2 years, the market's been screaming up because the expectation was that AI was going to just be exciting, which it is. It's really interesting to see that, hey, we're going to have AI potentially give us just one level of intelligence that and efficiency. All those things I don't argue with, but what was hard for me to get my head around was how expensive. If AI is so expensive that only a few companies will be able to roll it out, to their employees, that wouldn't be generally consumed by, the public. Just a lot of questions, came up, and questions that, the way that I invest my money is I like to know, and hey, Zach, thanks for joining from Europe. The sale on stocks, very well said. There's a big sale on stocks today, and we'll see how good the sale is today. And we'll also see how long the sale lasts. Will it last a week? Will it last a month? Will it last a year? Let's talk about that. But let me finish my thought on opening with DeepSeek. So the path we were on before, this DeepSeek news was, hey, we're going to spend because this is so exciting. It's so strategic. And it was becoming a little bit of whoever's spending the most money is getting a lot of attention by investors, and money's flowing in there. For example, NVIDIA is like, hey, everybody's buying our GPUs. Now we're going to have Blackwell, and people are going to spend more money on that. It's like, okay, but show me one business that's making money off of the AI, business that they've created. We haven't gotten to that point. One company that was making money for sure was NVIDIA, as well as others that were building out that data center. But NVIDIA has been priced to perfection. When we look at the NVIDIA stock, it's just been such an incredible rise, right? It just went parabolic. And I've seen this before. I saw it during the dot-com bubble. And it's interesting that I'm hearing similar stories. The story about how you have businesses that are spending massive amounts, and then the market's like, oh, we got to buy that stock because they're buying so much AI technology and they're going to be so big. That was a similar story as the dot-com bubble. The valuations of companies back then, they would actually look at their expense and their CapEx. And if, let's say, a company was being careful with their money, and they were like, no, we only want to grow in spaces where we think we're going to play well, and they don't spend a lot of money, those companies were valued less than companies that were spending like just crazy, out of control spending organizations. So now we have a story that rhymes. It's not repeating exactly how it was back then, but it rhymes. It's like, wait, you have the president rolled out a Stargate program, or whatever they called it, where there was going to be $500 billion of spend. And now DeepSeek, you are now kind of breaking that story, or breaking that whole idea. So that's let me get rid of this message here. All right. Um, so back to DeepSeek, and now that we have like a new player that's come into the market and really potentially threatening like the path we were on, where you have um, companies were investing in NVIDIA GPUs pretty much uncontrolled. It was a question of, it wasn't a, hey, we can't spend the money. It's, we can't get access to enough GPUs. And is that story going to change? If it does, man, NVIDIA stock is in for a really, really bad period. I've been questioning the NVIDIA valuation for some time. You can check my videos from around early June. So now NVIDIA's still up 4%, but that's a pretty good term, right? That's 8 months, 6, 7 months. And it's really going to be interesting to see how the NVIDIA stock plays out. Today, the stock is down 11.66%. Yesterday, or I should say Friday, they were a $3.5 trillion valued company. Today, they're $3.09 trillion. They lost $400 billion of capital left the NVIDIA stock. And that capital is going other places. One of the places is bonds, by the way. Bond prices are going through the roof today because investors are going to safety. They're like, wait a second, I want to make sure that, if I have NVIDIA gains, I want to take them and just, cover, or I should say, recognize my gains and just call it a win. As opposed to if this thing were to go down 20, 30%, that's going to be a pretty good haircut on my overall position. Looks like I have a comment here. DeepSeek doesn't work. Anyone tested that? I have not tested it. I just got familiar with it. I can't tell you that it's great or it's not great. But I would tell you this, that I was listening to interviews that they had that big conference in Davos, and this one expert in AI, youngster, he came out and he made a lot of waves in at Davos because his company actually rates the AI models and kind of puts out an opinion of which one's good, which one's bad, and he made a lot of waves because his company gave the Chinese companies really good ratings. And it became a real stir at Davos because the American companies were like, whoa, we thought we were way ahead. And we may not be maybe as further ahead of China as we thought we were, or maybe even China is leapfrogging us, or maybe China's head to head, close to us. And they're calling this a Sputnik moment. Having said that, I haven't tested DeepSeek. I'm not an AI expert. I know enough to kind of understand it, but I'm not an expert. I will be doing so. I'm going to check it out. It's just the news is hitting so fast that obviously it's scaring the market. The NASDAQ is down 3%. That's a pretty good down day. S&P is down 1.72%. The Dow is down only 27%. So the good old school stocks are holding their value. For now, the Russell is holding its value. The VIX is going through the roof today. It's going to go through the roof. Yeah, it's spiking. VIX is the volatility index. It's how much fear is in the market, and it's really going through the roof. So that is what's happening there. Now, coincidentally, yesterday I had a live stream. It was a real good one. We had a lot of people on the live stream, and NVIDIA kept popping up. People wanted to know, I don't hold my opinions, secret, that, in some cases I'm way out on left field because of the valuations. And I just began to doubt the valuation of NVIDIA. I think the company is great. I've always said that. I mean, I've covered NVIDIA for a long time. I just felt like, man, this thing is priced to perfection, like perfection for the next 10 years. They're going to have to grow the way they're growing for a long time. That's just going to be really hard. They're going to have some bumps along the way. Today is a pretty good bump. Today is a pretty good moment, Sputnik moment, where you mean there's another way of getting to the outcome with AI as opposed to the one way we thought was going to be the future? This is all normal. DeepSeek disrupting the market is normal because AI is so new that you can have situations where a company comes out and does it better and innovates a little faster, comes out with a way that is far faster, better, cheaper, less expensive customers like. That's great. That's called innovation. And that is expected. In AI, it's so new that for companies to say, and I'm going to go back 2 years, 2 years ago, for them to say, oh, this is the way AI is going to be for the next 20 years. That's kind of unbelievable because if it's a new technology, as more minds and companies and scientists get their hands on this paradigm, they're going to make it better. And as they make it better, they may disrupt the company that was doing it the way that we were doing it 6 months ago. And today with DeepSeek, some of that disruption is happening. It's happening fast. It's really questioning, oops, should we be spending these kind of dollars? Mike, the dividend investor guy, how are you, sir? I was on vacation. I took a vacation to Arizona, had a great time, and came back and DeepSeek just really disrupted my Monday. But I'm diversified. My bonds are doing great. All my tech stocks are just not doing great. They're just getting crushed. I do have a short position on NVIDIA. It's doing really well. I actually bought a put option, and I'm sure I haven't even looked at it. It's the news has hit so fast this morning. I'm just trying to keep up. Investing comes with days like today. And the one thing that on days like this, we got to keep our heads clear and realize that this could be a huge opportunity, the beginning of a huge opportunity where the market will sell off. It'll get really emotional. Let's go back to the VIX. The market will get emotional and just start freaking out, and it'll start selling off really good companies and giving us great prices. We'll see. We'll see if DeepSeek is a one-day kind of spark in the galaxy here, or if it's going to be a 1 month, or if it's going to be a 1 year, if it's going to change the whole year for us. I could tell you when ChatGPT came out 2 years ago, it created such a stir, and I just didn't get it. I'm like, wait, I get that they're giving you fairly decent answers and it's an upgrade from search. Point taken. But the stories that it shot, or it started, which were, oh yeah, pretty soon we're going to be doing drug discovery. We're going to be doing all these really established methods. We were going to disrupt them in short time. I was like, no, that's not going to happen. That's not going to happen for 10, 20 years. Just because it's so new, you have to really make sure that it's accurate, which now ChatGPT is proven to be inaccurate. It's not accurate all the time. Some of the facts, it makes them up. Some of the facts are incomplete, and all the models are that way. It's not just ChatGPT. So just imagine being an attorney and you go to your client, well, I'm 90% sure that my facts are straight and we'll go into court 90% sure. No, you would, as a client, you'd be like, no, we have to be 100% sure. We have to have all our facts straight and go to the next profession. Your dentist is like, hey, 90% sure that this is what's going on and your treatment's going to be this based on 90% accuracy. that would never happen. You have to be 100% sure. And the human mind is what will look at the situation and make an on the spot decision and validate information. That's why we have advanced to be the dominant species on earth is our minds, and they keep getting better and stronger. AI is going to be a benefit to mankind. It most definitely is. It's just not going to happen in 2025. It's going to happen maybe 2035. We're going to see a lot of cool stuff. It's just going to take time. And yeah, we'll see. So, and it looks like Yogi, and I apologize if I got your name wrong. I would like to know from you, what do you think of NVIDIA and their stock price? Do you think it's going to rise or fall? And what do you think about their valuation? It seems like you know AI, so I'd be curious to read your comment on that. Please put it in the chat. All right, so NVIDIA is down 11%. This most definitely is crushing the market. We are down substantially. Let's take a look at the heat map. I think it's going to be a little red today. Yeah, it's pretty red. So so we got deep red with NVIDIA, Broadcom. Everything's kind of getting torched in semiconductor. Semiconductor was overpriced. And again, if you guys watch my channel, you know that that's a consistent message. And I've been very careful. I've been investing in Qualcomm. I've been investing in Lam Research. I think I'm going to take a haircut on those. So Billy Johnson, I don't have tech stocks. I'm up good amount. Good for you. Goog is a buy now. I can't argue with that. We'll take a look at Goog. I think it could be an interesting day. I'm a dollar cost average guy, and one of the reasons is we look at this sell off. Is it going to last a day, a week, a month, a year? I don't know. Now, if I dollar cost average, hindsight will be 2020. Eventually, we'll know how long did it go, and did it really reduce prices on like Google? So I'll dollar cost average. I own a lot of Google, so it's one of my big positions. So we'll see if I buy any of that. Infrastructure, Microsoft is down 3.62. I've been buying into Microsoft, so I will definitely be buying some Microsoft today. Palantir, which has been a bottle rocket, just flying into space with no limitations, is down 6%. Apple up 1.64. It's a place of safety. They have been slow and pretty much behind on the AI thing. Well, maybe today investors are like, hey, these guys had it right. Salesforce is up almost 2%. They too have been questioning a lot of the AI hype. And they've said, hey, they've had chatbots that have been working for quite a while. And they're making a lot of commercials about their chatbots. So maybe they're having a good day. We'll see. Amazon's down. They have a huge hyperscaler business. That's a buy for me. I've been buying into Amazon. It's one of the most valuable companies. And if you're going to discount Amazon, I will gladly buy some shares. All right, financials. Keeping it together. Look at these guys. Chubb. Nicely done. I like that. I reviewed Met over the weekend, and MetLife just looks really good. Thinking I'm going to start buying their shares. Not a bad idea as technology's crashing and burning. Visa's up a little bit. They're going to announce this week, so that'll make a lot of news. So Goog, they have their cloud. They also have a big AI business. They have their Waymo business. So it's down 3.36%. And I own a lot of Google, so I might buy a share or two, but probably hold off from making a big investment. And then Meta is my biggest position, so I'm not buying any shares. I'm going to cringe when I look at my losses for the day because I own a lot of Meta, like $270,000 of Meta. So when you take 3% from that just on Meta alone. I'm going to take a $8,000 hit today, and that's just the game we're in. I'm up big on Meta, so no worries. Aerospace, nice place to duck for cover. Consumer staples, look how green this is. This is what we expect in consumer staples. When everything's on fire, when technology's on fire, growth is on fire, investors will go to Procter and Gamble, Coca-Cola, Pepsi, Walmart. They'll be like, hey, I'll camp out here until this happens. Healthcare, look at that beautiful green. I've been saying that healthcare is going to rally one of these years. It's a really good, in my opinion, a really good sector. They have really cool companies that are like biotech companies are high growth. Today, they're really enjoying a nice day while semiconductors are crashing and burning, and there's like a nice campfire going on with in semiconductor. Energy is okay. Chevron's not in red, so that's a win. So that's what's going on in the heat map. Let's take a look at sectors. This will tell us, this will be interesting to look at. So consumer staples having a great day, healthcare having a good day. And of course, technology is having a tough day as expected, but they've been killing it for 2 years. So in a way, this is healthy to see stocks sell off in sectors that have been red hot, moving to sectors that haven't been red hot, that have been lagging. It's I think a good thing for the markets. If you just have one sector that just keeps going up and up and up, it creates a bubble, and then when those bubble bursts, it's very painful for investors, especially investors that got in late. So a lot of EOG. I think Nvidia will go up. Seems very low now. Yeah, we'll see. I disagree with you that Nvidia will go up. I think Nvidia will go down. I've been saying that since June, and I'll show you my valuation. And the reason for it is, as we look at Nvidia, I'll kind of jump to my valuation. I showed it yesterday on the live stream. You have Nvidia is priced to perfection. When I look at their free cash flow forecast, this is like a perfect, everything comes together just right. It's going to do this. Well, it's never going to come together just perfectly right. Today's a good example. Oops. There's another idea for AI that may work, and if it does, it crushes your business. Well, here we are, folks. So even I haven't included DeepSeek in this valuation. I think it's 33% too expensive, and that's with a very optimistic point of view on Nvidia. So that's my expectation. Shadow Guy, good morning. I sold my NASDAQ shorting ETF. Oh, man. Did you sell it today and made a lot of money? I hope so. So anyway, Nvidia, we'll see. That's going to be a very important story to follow. It looks like it's down 11%. Again, what shouldn't be lost on us is on Friday, they were a $3.49 trillion company, and they've lost upwards of $400 billion of capital flowing out of Nvidia. Is that going to flow back? We'll see how long this DeepSeek story lasts. If it's factual and DeepSeek is a real deal, why would investment go back into Nvidia? Who is going to buy Nvidia? Now the story of, businesses spending so much to have the biggest superclusters of GPUs, is that actually a positive or a negative? A month ago it was very positive to say, hey, I've got the supercluster of GPUs. I have the best processing and technology platform in the industry. Okay, got it. Today it might be, well, that's really, if you have that much invested, is that over capacity? Are you spending too much? You got to show me some fundamentals behind that AI business. How much revenue is it bringing in? We certainly see how much cost is going out, how much money you're investing. So super interesting day. So we looked at sectors. Looks like consumer staples are having a good day. It's a tiny sector, by the way, $4 trillion, where technology ended up becoming a $21 trillion sector. Just massive. Such a big sector. So I think they could get a nice haircut, 20-30%, and have that money flow into bonds and other sectors like healthcare, consumer staples. All right, the mega caps. So our friends at NVIDIA on Friday were the most valuable company on the stock market, and today they went down 2 spots. Apple's having a really good day, considering that, look at all this red. Broadcom is having a horrible day. TSM's having a horrible day. Walmart's having a good day. JP Morgan's having a decent day. But super interesting. All right, so today we had earnings from AT&T, which is a nice run for cover kind of stock, so I'm sure they're going to do okay. And we had Nucor, I believe that's steel. That's after the close, so we don't have any information just yet. SoFi announced, and their stock was going down. I wasn't quite sure why it was selling off, because I thought when I looked at their earnings, I saw good stuff. Like the revenue grew 26%. That's very good. And then their guidance was good for 2025. They're going to grow at 23 to 26%. That's really good. And they grew their book value very well. So I don't get it. Like what's the story there? Now, what may be the case, analysts believe it's now overpriced by 28%. Before they had this massive haircut, analysts actually had it at overpriced 36%. What may be the case is in very short time, the stock more than doubled. And when you have that type of appreciation, the market, again, it's looking at this stock going, man, this thing is going to just take off. It's going to be priced as if they're 5 times bigger than they are today. And when the reality hits, you have an earnings that shows that, hey, no, they're growing really well, but it's not incredibly well. It's just growing well. Then investors are like, oops, I got to get out of the stock because I actually think it's overpriced. I believe SoFi is not the right investment for me in this space. I think they're overpriced, and I invest in other companies, as I've noted. I have a video out there where I compare SoFi against Robinhood and New Holdings, and SoFi comes out in 3rd place in that ranking. Well behind Robinhood and New Holdings. Robinhood and New Holdings are what I hold. And just out of curiosity, I guess we can look at those in a bit. But SoFi, this is what happens when you have certain stocks that are just priced too high, is even though the fundamentals come in, the fundamentals in general seem to look positive, stock sells off. It's like, no, we were looking for perfection, and that's not perfection. And the way they guide, they're like rational, and they guide with a rational mind, even though it's positive guidance. It's not incredible guidance. So the stock sells off. So it's a tough day for SoFi investors. But, if you're a SoFi investor and you bought here at $6.32 and you're at $15, it's a super win, man. Congratulations. It's just a bad day. We'll see if it's more of a trend and it keeps going down. We'll see. ASML, this one just is getting shellacked. Now, this one I don't think was super overpriced. Look at the 1 year, look at the 5 year. ASML is a super important company. They have very, very strong barriers of entry, moats. So ASML, I'm in Lam Research, but I might take a look at ASML from a valuation perspective and maybe start buying at some point, because these guys did not get overpriced, but they're getting shellacked today. Their stock is really tumbling. So that's interesting. And our friends at Microsoft, I think Microsoft for me is a buy because they haven't really been, going up with the rest of the market, just crazy rates of appreciation. It's actually seen some pretty good volatility. Market isn't quite sure what to think. Microsoft is going to announce. So I'm a dollar cost average guy. I'm going to buy some shares of Microsoft. It was down more than 4%, and now it's kind of recovered some of its gains. I think other people are thinking along the lines that I'm thinking and buying into the stock. I usually don't buy early in the day, especially on a day like this. But I'm probably going to buy right after this stream because we may see a recovery in stock prices. And, I just want to dollar cost average my buys probably in about an hour. So we'll see. Android PC gameplay. How are you? Nice job. All right, Shadow Guy. Good way to start Monday. It's good that you have a win on a day that's so red. It was a very good month. As of Friday, I'm having a very good month in January. After today, I mean, this is going to be I'm going to be hit hard today. Just on Facebook stock or Meta stock, I'm going to lose $8,000. So it's going to be a real red day. All right, so let's take a look at Google. I think that was the stock that came up earlier. So Google Alphabet down 3.37. Now, the positive about Google among this whole DeepSeek kind of story is this is not a one-trick pony. These guys do search. They do it better than anybody else. They do YouTube. They do it better than anybody else. They get more viewers, and the streaming on YouTube is higher than Netflix. They don't have to create any content. Just the creators create content. And they have the cloud business, which has been growing really well. And AI has been a big growth catalyst for their cloud business. So that's good. They have other businesses that they're into, like Waymo, which is a real robo-taxi business, the leader in the United States. So Goog is a well-diversified stock, and you can buy Goog. You can buy Google with the L. I'm not going to argue about which one is better. I buy Goog, and I'm fine with it. This stock for the 1 year, it's working. Over the 5 year, it's working. Good stock, good solid stock. And I'll probably buy some shares today. It's just see how it's recovering. That's pretty good. That's good to see. All right. So today is kind of a stream in the morning that I didn't expect I was going to do, but the news was coming in fast and furious. And I thought, man, I would like to stream because this is just way too interesting to sit on the sidelines. Let's kind of talk about this. So NVIDIA is down 12% over the 1 year. It's up 100%. A lot of the gains were early in 2024. And since June 18th, stock is down 7.6%. I think that NVIDIA stockholders are looking at that chart going, whoa, maybe the concerns around the stock price is way too high. And at some point, businesses will stop investing at these crazy levels and buying GPUs like they're not going to make any more tomorrow. That's got to stop, especially if you introduce a new technology paradigm or advancement that changes the forward path of how we're going to do AI. If DeepSeek, and they're not going to tell us how they do it, by the way. They're not going to say, oh, we got this trade secret that is super advantage, and we do it without GPUs. We do it in this other way. They're going to hold that as airtight as possible. And other companies are now probably thinking to themselves, how is DeepSeek doing it? How are they doing it less expensively? Maybe we got to stop spending so much money and think about, is there a different way of getting the outcome we're looking for, building our large language models, inferencing, all that's going to be required? Because if we go to market And our competition is, let's say they're 10% of our cost, right? We're at a huge disadvantage. We will go out of business very quickly. So we have to rethink. So they're going to pump the brakes on buying potentially NVIDIA GPUs, building out their data centers. One more company type that I want to look at is the electricity companies that were just going crazy. And was it Vertiv? Okay, these guys are in the data center. This is one of the stocks that I've been shorting, and I've been getting some really interesting comments. Some of the commenters have been teasing me around how crazy I've been by saying that Vertiv shouldn't be shorted. So hopefully they provide some comments today. But there was these power companies that are like, they sell to commercial accounts, and I can't think of some of their names, but I like to see some of their, it's going to utilities. So next era, here we go. So GE Vernova down 18%. Constellation Energy down 17%. Vistra, this is the one. This is the one that I've been covering for a while and just doubting that this is a utility. This is like nuts, man. These guys, look at their growth. This is not incredible growth. It's like 4.46%. That's like nothing. You know, we just showed SoFi is growing at 26%. That's impressive. 4.46% and your valuation's going through the roof is like, why am I going crazy? You know, why is this up 282% when you're showing revenue growth of 4.46%? Let's look at their awesome margins here. Their profit margin, 11%. Wah, wah, wah. Just 11%. Free cash flow, $2 billion. And they've had negative cash flow some years. If their energy input cost goes up, these guys will see their free cash flow shrink. And free cash flow is really bad for utilities because they have to put so much CapEx into their businesses. So this one here is getting hammered. And we'll see, man. A lot of capital went into this. It's $51 billion market cap. And let's see what they were. Not too long ago, they were a $22 stock. Now they're a $152 stock. And again, their revenue, not very impressive. It's like, okay, you don't have fast revenue growth. Okay. You don't have a lot of profit. All right. You don't have a lot of cash flow. It's like, why are investors so excited? You know, they're eager to buy a business that's very bad. And fundamentally, right? Like if you look at a super awesome business, like 90% margins, growing 50%, and they have really great competitive advantages in the market that are protected by patents and stuff like that. Now we're talking. That's an exciting business. Sign me up. But not with these guys, Vistra. All right, let me catch up on comments. Let's take a look at Android PC. So Nichix, Zim, man, I hold a special place in my heart for companies where I made money, and Zim is one of those companies. Everybody was doubting them, like, man, these guys are terrible. They're horrible. I bought them, made money, sold them. They have had a pullback. I sold like in the 20s, like $20, $22 per share. And so I did well with them. And I made like 50% in a short period of time. So I like Zim. Looks like they're rallying today, and they pay a stupendous dividend because at certain times they just make so much money. Rates are right. They have a very young fleet of ships. Really good company. And I don't doubt that they're a good company. Just this type of industry is not going to have a long-term appreciation. And what I'm looking for is I want a stock that is going to grow my wealth over time. I want a stock that is going to, over a 5-year trend, in the case of Meta, it's going to take my wealth and double it quickly. In this case here, 190%, even though they're having a horrible day, not a bad day after all. 1.5% on a day like this is kind of a win. Oh man, I thought I was going to lose so much money on Meta. Looks like I didn't lose as much money on Meta. But my point being is, this is the ideal investment, is buying an investment like around here, really buying as much as I can, and then dollar cost averaging in other times, and then seeing this investment go up over time. When we look at Zim, I like Zim. I'm a fan of Zim. They haven't done that, and I don't expect they're going to do that. And over the 1 year, it's up 29%, which is a great win. Beautiful. But from, I guess, from about May, early May to now, they haven't really done much. So you're depending on that dividend, which isn't bad. I'm just pointing out that I don't expect Zim is going to take my wealth and double it in the next 5 years. I think it's going to be going up, going down, going up, going down. So as you guys have seen in my videos, I've been an investor in Zim. I'm positive on the stock, but I'm realistic about the industry. So those are my comments. That's the way that I invest. If you're making money on Zim, congratulations. I want you to make more money on Zim. I want Zim to do great, but that's my decision from an investing perspective. And, if Zim were to come back down to $12 a share, I'll be the first one in line waiting to buy this stock, because I think it probably be underpriced if everything remains relatively the same with regards to their fundamentals. So that is Zim. I love Zim. I like their ships. I like what they did with their money when they were just booming with cash, and just money was coming. Cash was pouring out of their ears. They bought ships. They bought new stuff. They have a very young fleet. They did the right things. So I'm glad they're rallying today. PT. I am buying into today's sell-off. I'm a DCA investor, which, FYI, why do I dollar cost average? Because I am not smart enough. I'm not smart enough to, let me tell you about a stock that I'm buying. Microsoft. I'm buying into Microsoft recently because I think the stock is unappreciated. And this is a $3.2 trillion stock, but compared to the others, I think this stock has a bright future. It's a diversified business in technology. Other businesses are doing great. I know the AI business is now in question, but it's not the only thing they do. They do other things that are really quite impressive. Now, I'm not smart enough to know this is the moment when I need to buy shares. This is the moment when I need to buy shares. So I'm like, I think this is a good investment. I think this one is going to double my money over the next 5 years. So I do just like to buy, especially on a day like this. I'll probably put $2,000 into Microsoft today. And if it goes down another 4% tomorrow, I'll put another $2,000 in. And that's a pretty chunky, large buy for me. But Microsoft's Microsoft. To me, this is going to be a good one. It's easy to see that, oh yeah, these guys are really valuable and important. They have great barriers of entry into the markets. But as I study this one, I'm like, man, the market's just been, I think, a little too pessimistic on Microsoft. This is the great Microsoft. This is not some fly-by-night operation. These guys have been getting it done for 50 years. Boom. So let's see how that goes. All right. So we were talking about buying today, which the answer is yes. And Shadow Guy, you making money on Zim? Yeah, look at that. It's Chubb's up 2%. That's a win. LMT up 1%. Those are two that are on my buy list. I won't be buying them today, but I'm glad that I own them. I don't own enough to counterbalance the losses, not by any stretch, man. Did more than very nice, man. Zim, go get it done, Zim. So you're in Hood as well. I'm in Hood. Hood is my star of the show. It's down 4.6%, but beautiful, 330%. So Robinhood's been growing my wealth, and I've been not having to put much more money into Robinhood because the market's been increasing my stake in Robinhood just through this great appreciation. I think Robinhood is still priced okay, but I mean the run up's just been incredible. I thought the company was incredible, and you can check me, check my videos, search Robinhood on the history of my videos, hold me accountable. I still think it's discounted by 23%. And if you check my videos of a year ago, I was saying, oh, Robinhood's greatly discounted. It's discounted by a significant amount. And it probably sounded crazy then, but now it's really run up. Is there a possibility that this stock could sell off? Absolutely. Just ask NVIDIA. And but it's done great, man. Robinhood's awesome. So BTBT is down, 10%. I think I was chicken when it came to BTBT. I think it's a really well run Bitcoin miner. Now they're doing hyperscaler services. But with today's news, I think the hyperscaler businesses are really being questioned now. Like, whoa, are those really a good idea to hold? So this one's down 10% for the 1 year. It's only a 12.7% rate of appreciation. So this one here, I just don't think the market's going to get overly invested in it in a super small cap. And maybe they're right. Bitcoin's down big today. Bitcoin is down to $101,000 per coin. It reached a height of 109,000 per coin. So when the Bitcoin price goes down and the hyperscaler businesses are being questioned, Bit Digital, they're going to have a tough time. So I've stayed away from investing, but I like the company. I think they're unappreciated, discounted, all those things. What would compel me to invest in them? I don't know. I'm invested in Google as a hyperscaler, Amazon as a hyperscaler, and Microsoft as a hyperscaler. Adding one more hyperscaler, I think, is risky for me. So that's why I was like, took it off my portfolio. I hadn't invested a whole lot, but that's my feeling on it. It looks like Mike. Okay, so Shadow Guy, BTBT would be a good swing trade. Yeah, could be. You're glad you sold BTBT. Yeah, man. I think if the whole DeepSeek story is ends up becoming a trend, like, hey, businesses are now questioning capex. Like, hey, we don't want to get too far ahead of this thing because if we end up, hey, everybody thought we were going to have to spend a lot of money to get to a certain place in the AI journey, but now there's an alternative that costs 10% of what we thought it was going to cost. Okay, so halt everything. Don't spend any money until we figure out, is that alternative real? Because if it is, we got to switch paths. We got to go toward that development journey, because you don't want to end up spending, I don't know, 10 billion, however much you were going to have to spend, and then find out, oh, we are way overpriced. The market is actually doing it a different way. Similar example would be fiber optic communications. So like 20 years ago, the internet, right? And with fiber optics, you get much faster internet. That's not in doubt. I use fiber here. Okay. And I went from having my internet on cable, which was okay. And then I went to fiber. Wow. It was like, man, fast. Awesome. So 20 years ago, that was the conclusion. It was accurate. They overbuilt, terrible. They overbuilt to the point where they had too much capacity. And then the communications companies were like, well, we got to like discount the heck out of it because the average consumer they don't care that they can download their emails 10 times faster. They care about price. So we're competing against an inferior product because the consumer doesn't care. They're like, I don't care that I can download my, you know, Google search 10 times faster. Don't care. I just want to get the job done. And I work on my computer for 30 minutes a day. I'm not going to pay you $200 versus $30 to my internet service provider through DSL or cable. So they had that problem. And those stocks lost tremendous value because they overinvested. They built these networks that were like awesome. And now we're beginning to use them more fully. But the money was already lost. And it's not a business that is highly desirable. I know that AT&T is building out their fiber network. They had a good day today. I have to admit, I think AT&T was a place for safety. It's like being in a snowstorm. Just snow's blowing all over the place. It's minus 30 degrees and you got to seek shelter. You go to the AT&T hut. Get in there and warm yourself up in this storm of dropping stock prices. They're up 5.81%. Over the 1 year, they're up 39%. Beautiful. Over the 5 year, down 15%. This has been a value destroyer, in my opinion. Their balance sheet is not good, in my opinion. And I'll show you what I mean. So over the 1 year, congratulations. Awesome. It's just not an investment I make because I need to stay in my lane. I like buying into businesses that are exceptional or could grow to be exceptional, could grow to be awesome. And part of the are they awesome is the balance sheet. Are they great is if their balance sheet over time builds a bunch of cash and no debt, that means they're great. That's one of the most important scorecards. But with AT&T, they've been around forever. And they have $3 billion of cash, $140 billion of debt. Woo, that's a lot of debt. Their market cap is 172 billion. So another way of saying it is, if you wanted to buy the whole company, hey, I want to own all AT&T. I'm going to write a check for 172 billion. Perfect. And then they say, but it's almost like buying a house and there's a mortgage on it. Somebody has to pay off that mortgage, and the mortgage is substantial. So you wrote a check for 172 billion. You want to own the company, you don't want cash debt on the balance sheet. So you have to write 2 checks. The second check you have to write for 140 billion. Whew. So that's what I don't like about AT&T or Verizon is their debt. They have to just load their balance sheet with debt. I don't like that. I'd rather have Meta that has no debt. I'd rather have Microsoft that has no debt in relation to their cash. They have enough cash to pay off their debt. And Google, I can go down the list. Those are great businesses that are going to grow my wealth. AT&T is not. So that's why I stay away from it. But if you own AT&T and it's worked for you because it has that nice dividend and it's appreciated 39%, congratulations. I'm glad you made money. I hope you make more money on AT&T. All right. REITs are doing well. Beautiful. All right. I needed some good news today. Today's a tough day, man. Look at that. CTRE. This is my one REIT. It's up 2.3%. This is a business that's getting it done. I thought it was doing better than over the 5 year. What's going on here? Well, I guess I was wrong. But the 1 year, it's doing well. And it looks like REITs are doing well. Yeah. So place to seek cover, 4.4% dividend yield. Just getting it done. And it had been coming down because the rising interest rates, they put pressure on real estate. Now, the good news about, crashing stock prices is that'll create a lot of fear in the economy, and it'll probably create the consumer will start to not spend as much. Like, oh man, stock market's crashing. We better not buy that new car. We better not go on vacation. Hey, we're going to go to Walmart. Let's not load up the shopping basket with stuff. Let's just buy what we need. They're going to start watching their spend. Well, 70% of the economy is consumer spend. So it may start affecting the economy, which means they may start lowering interest rates. So Hyperwizard fixes down 22% today. Anything having to do with data, you got it. You got it. Data centers, it was like, yeah, they're going to build data centers with nuclear reactors. Man, they're going to spend so much money on data centers. And it's like, okay, we'll see. If that happens, you think about, I think I went to the wrong one. Am I looking at, wow, man, it's getting hammered. I guess these guys do like old school infrastructure for those data centers, like installing cooling systems in the data centers. Got it. Okay, that makes sense. And the stock had been just crushing it, right? So you think about data center cost, right? You're Procter and Gamble, and you're like, well, and maybe that's a bad example because they're so old school, they probably wouldn't be excited about AI. But let's think about like Salesforce, CRM, symbol CRM. And they're like, hey, we got pretty good balance sheet. And if we're going to get into this AI race, we'll have to spend, I don't know, $20 billion, $50 billion. That's a big investment. And in proportion to our revenue, does that add like, for every $100 of revenue, does that add $10 of cost? It could. That would really affect our margins. It really affect our net income. It really affect overall our fundamentals. It's a big, big risk because if AI does not deliver the revenue growth, which right now, frankly, and I would love to be corrected, it's not delivering the revenue results, right? We haven't heard of one story that's like, oh, with the new AI business, we have like a 50% growth rate when we were just growing at 10%. I think businesses are beginning to relabel certain things that were on their income statement 5 years ago, but they were called something else. Today they call them, oh, AI. We're selling AI services, or we're selling AI this. We rebranded our chatbot that we used to call whatever assistant to AI. And that is understandable because AI sells. If you hear how many times AI is mentioned on earnings calls, it's a little ridiculous. So it's super risky, and man, it is blowing up some stocks. And I imagine, like this stock here down 21%. This is a small cap. 5 years ago, this was a $46 stock. Now, investors had to feel good about their stock going up 9x. But today, I wonder what that investor is feeling. Like, uh-oh, how far down is this going to go? These types of events, see this hyperbolic trend, unsustainable. If this is sustainable, like all the value, it would absorb all the value, all these stocks, they would absorb all the value of the stock market, everything. And it's like, yeah, it's unreasonable to think that that's just going to keep going. It's going to work for a while. And investors, if you get in and get out at the right time, you're going to do great. But today is probably a tough day for Comfort Systems investors. It's a tough day for me on certain stocks. I'm not sheltered by this pullback. What's going on with the pullback? What the heck's going on with this pullback? So NASDAQ's recovered a little bit, but it's still down. So it's down 2.34%. It was down 3%. So it's kind of coming back a little bit. See this little gap here? It opened way down here, and just in the intraday, it's gone up. So that's good. All right. But again, what I'll be very observant on is DeepSeek the beginning of a trend, or is it one day where this story got attention and then it went away and we're back to got to overspend on AI, got to overspend on AI? Because even these CEOs, their mantra has been, it's too important not to invest. It's too important not to invest. So I don't know if that's going to change. Earnings are here. Microsoft's going to announce on Wednesday, and you have Apple announcing on Thursday. You have Meta announcing on Wednesday. Will they stick to the, we're going to overinvest on AI, even though the market's crashing and burning right now? We're going to overinvest. We'll see. I'm an investor in both Microsoft and Meta, so I'm going to listen to both earnings calls. All right, so let's get back to the comments. Rotel and Cheese, good to see you. Thanks for joining. So Rotel and Cheese, I've been using DeepSeek for a month now. I don't believe the market is only just waking up to how cheap it was to put together. You've been on it for a month. You've been on my live streams for a while. Very cool. I'm glad you shared that, man. It's new to me, but I don't use the AI a whole lot. I don't know how often you guys use it. I mean, I'm not writing term papers and stuff like that. So I'm sure students who are in there, they're learning, they're finishing their education. Yeah, they're writing term papers left and right. So I can understand students wanting to use ChatGPT and Meta, and Gemini, and DeepSeek. But I have things that I do, and I use AI a little bit, but it's not a regular thing that I use. Not even to write emails. It writes emails and it doesn't sound like me. I have my way of writing and expressing myself, and AI doesn't do that. OHI. So Omega Healthcare Investors. Real Estate Investment Trust. Nice. Up 2%. Yeah. So real estate's a place to go for a little bit of safety right now. Healthcare sector is doing well. CVS has been a great surprise. I've been saying that about CVS, that there's so much value there. I get that investors don't want CVS. They don't want healthcare. But I look at these fundamentals and I'm like, all right, let's forget that they're a healthcare company. Green, 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 green. This is revenue growth. And they're massive, right? Okay, that looks good. They have good profits. They have good gross margins. For a retailer, this is a good gross margin. Okay, good. They have good free cash flow. Historically, they've had phenomenal free cash flow, and they have had a dip in cash flow. But if they can get back anywhere near their historic cash flow rates, this stock's going to triple in value. I'm investing in it. It's good to see that they're having a positive day. Year to date, the thing's up 25%. We're on the right path with CVS. I'm on the right path with CVS. And remember, none of what I say is investing advice, financial advice. I'm stating what I'm going to do for me. And I'm not asking you to do anything that I'm doing. I'm just stating my opinion. But CVS is having a good day, man. Good. Tomas, good morning. Good to see you on such a terrible day. It's good to see some friendly faces and talk about stocks. But, this is good news. If it's a trend and it really sells off for a while, this is good news disguised in bad news. If stocks just get shellacked and Meta gets taken down 25%, I'll buy. And name the quality business. If these businesses, their stock prices sell off it's a better opportunity, especially if you're a long-term investor. If you're a young investor that's like, hey, I want to build wealth. I want to build wealth over the next 20 years. Big sell-offs, big crashes are great news. We buy low and see that investment go up in value. So now today's, when I look at my losses, it'll be a pretty good haircut. And I need to brace myself. Like, oh man, that was a pretty good chunk taken out. But I was doing really well in January. I was up like 128 grand. Today will probably be like, I'll lose 30, 40 grand is my guess. So that'll be a good chunk, right? Like, not fun. But, even just in context of January, we'll see, but think I'm going to make it out of January well into the positive. And then we'll try to figure out the rest of 2025. But this might be the big signal to investors of, hey, you might want to rotate out of pure tech, right? Because the investors that were in pure tech were like laughing at the rest of the market. And FYI, understandably, if you're like 100% tech, you grew your wealth very fast. Congratulations. But now you're like, okay, we are in a very heated market, $21 trillion. We just saw that NVIDIA lost upwards of $400 billion of stock value left NVIDIA immediately this morning. That's huge. Now, if let's say technology continues to sell off and it gets down to 15 trillion, that's going to be very painful. So maybe it's time to rotate into healthcare, maybe a little real estate. Financials is holding it together. Consumer discretionary, the right company, you can do okay. Communication services, AT&T is probably helping keep the losses contained. And I'm not a big consumer staples guy, okay? I'm not hey, I'm going to invest to get a very low rate of appreciation over time, just so that moments like this, my portfolio does well. No, I'll take the risk and I'll take the volatility, but I want the great long-term appreciation. So I'm not a big staples guy, but I am a big healthcare guy. Real estate, also, I don't go too far into real estate. Financials, I'm big into. Selective on consumer discretionary, but that includes, like, consumer discretionary includes Amazon, includes Tesla. I mean, there's some really good names in there. Communication services is where Google, Meta, Netflix are located, so that looks good. And there's some small businesses too that are really exciting in that space. So maybe it's a good time to rotate, kind of like begin to diversify. Good lesson for investors. Diversification is our friend. All right. So, man, you're up today, your portfolio. Good job, man. That is a very good job. Mike, you're up 40. And you guys got to start channels, and I got to start watching you guys. Nicely done. I am not up today. I'm fairly sure that I am not up. I haven't looked at my portfolio. I wanted to jump on a stream and talk this through, and then I'm going to check my portfolio when I end the live stream. All right, so we'll just take a peek at the market one more time, and we will see. Here's a story. So I wonder, like, again, I love NVIDIA. I think the business is awesome. I think their CEO is great, but he was becoming a little too much rock star, and maybe he could have focused more on, figuring out how to make his technology less expensive, because he was just getting wild into stories about robots and all this stuff. And I'm like, man, that's so far away. I think it's distracting. It's making people feel like that's around the corner, and it's not. So, well, point taken there. All right, guys. So everybody, interesting day, obviously. And let's see what happens. I'll stream as often as I can. It's good to be back on the grid. Good to see a lot of friendly names. And I appreciate you joining. I appreciate all your support on it. Everybody, enjoy your day as much as you can. And let's see if this turns into a great opportunity. Let's continue to be long-term investors and see how we can grow our wealth over time, trying to outplay the market and make money for ourselves. Everybody take care. Have a good week.